Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. Euro-dollar. A combined bearish engulfing pattern and bearish closing black Marobozo yesterday. After two sessions of indecision, it seems the market's finally given up, at least for now, trying to tackle or at least trying to close over the bright red breached upper time. It's currently at 107.40 of the late December 2023 to early March 2024 bearish shift pitch fall. And that is well without even referencing the congestion that's a little higher up of all the moving averages between 107.65 and 107.95, which is such a tight band. We should see so many disparate timed moving averages. Overall, the market is still outside and below the mid-April to late June ascending expanding wedge pattern. This ascending wedge pattern is quite interesting as it attempted to be a transformation pattern for a move up and out of the bright red bearish shift pitchfork in the first place. Admittedly, the downside primary target for a break lower out of the pattern, well, that has already been achieved, though it still leaves the much harder secondary target X below, down at 106 even. Personally, I have had strong doubts, which I've voiced here, about achieving that level, but yesterday's actions have soothed my doubts somewhat. I'd now like to review a pair of ideas I'd floated in earlier times. Firstly, we had a bow tie formation 4 weeks ago. Now, setting aside the fact that the moving averages went in and out of the bow tie formation in the wrong order, I had earlier been more concerned by the lack of response of the short medium moving average and the long moving average. They are both flatlining as such, which leaves the short moving average as a driver in this pattern, and that was, as I previously stated, not satisfactory. Added to this is that all we have seen this week is the congregation together of all the moving averages in a narrow range, and I am even more troubled. Nevertheless, the theory suggested that between 15 to 20 sessions after crossover we might see a period of volatility and a possible start of a move. So that was between the 12th and the 19th of June. The last day of that window was 2 days ago. As I said yesterday, and I quote, "Unless there is a surprising move today, then I will retire this idea." Well, yesterday's action just might have been that surprise action. I will now wait to see if this strategy of trying lower becomes a new move lower. Secondly, 3 weeks ago we had a weekly key reversal down. For most of that subsequent week, it looked like a rejection of that idea with a new recent highs. However, by the end of that week after, prices also almost ended in an immediate countering weekly key reversal down. So, as I've said repeatedly this week, a big caution in that we might after all be starting some sort of a follow-on lower from that weekly key reversal down. So far today, a further move lower into an area fairly free of congestion. The next support of note is the 2020 low at 106.36. Cable, aka sterling against the US dollar. A bearish engulfing pattern yesterday, if only just, but a significant riposte to the previous 3 sessions being bullish white soldiers. The market punched down through and closed below the important combination of the 50% Fibonacci line of the June 2016 to September 2022 move and the September 2020 low. Now both of these are at 126.99. Prices carried on further, below congestion at 126.72, only halting just ahead of the flatlining mauve highlighted medium moving average, currently 126.39, as well as a little lower, the short medium moving average, currently 126.17, and the 50% Fibonacci line of the July to October 2023 move at 125.90. Overall, late last week prices broke down and out from the dark blue highlighted April to early June bull channel. I had thought of looking at this pattern as an ascending wedge pattern, but I'll leave it as a bull channel for now, though I am very, very much considering it. So far today, capped on top by the congestion at 126.72, but also a dipping market down to test the medium moving average below it, and maybe soon also the short medium moving average below that. Euro sterling. An immediate countering bullish harami yesterday after the previous session's combined bearish opening black Marubozu and bearish engulfing pattern. That also looked like a possible hammer pattern. The market is still seemingly capped by the April 2021 low 84.70. Overall, from early May until last week, prices had formed a large bearish half hesitation with potential down to 84.30. This potential was achieved last week. Additionally, I had previously pointed out how both the primary and secondary targets have been achieved on the downside for the break below the purple highlighted lower trend line, currently at 85.55 of the late January to late May expanding wedge pattern. Now, so far today, a seeming attempted continuation higher from yesterday's action, but the effort has been half-hearted. We now look like a possible, what did look like a possible bearish dark cloud cover pattern. It's also looking more now like an indecisive doji cross. So there's mixed efforts there today. US dollar against the Japanese yen. A second consecutive bullish closing white Marubozu yesterday. There was also now a sixth bullish white soldier. Remarkably, it was the highest close since 1990, though obviously not the highest high. This significant move up punched through and closed over the important bright red middle time, currently at 158.39 of the July to December 2023 bullish Andrews Pitchfork. Topside now, well, we have the start of a significant congestion area between 159.61 to 160.34, and it starts with the May 1990 high at 159.61 and includes this year's high at 160.03 and the April 1990 high at 160.34. So far today, well, a small attempt higher, but then hesitation around yesterday's close. I suspect this market is getting to grips with just what yesterday's move up could really mean. It's looking like an indecisive doji cross right now, with potential possibly to be a, I don't know, possibly a butterfly doji, but it's more like an indecisive doji cross than anything else. US dollar against the CNH, the offshore Chinese yuan. A third bullish white soldier yesterday with the highest high and highest close since mid-November 2023. I continue to wonder if the long suspected rise in this market is finally coming. Below, we now have the previously mentioned congestion zone between 724 to 727, within which sits the rising short medium moving average, currently at 725.13, and the dark blue highlighted upper trendline extension to the January to April ascending triangle. That's currently at 724.12. Looking topside, well, the next topside resistance of note is the mid-November 2023 high at 731.06, which ties in with some earlier congestion in the 731 even area. As a side note, I am very tempted to look at the action since mid-March today as a possible reverse head and shoulder bottom pattern type. But for now, I'm resisting that temptation, but I may give in. So far today, well, a small attempt higher, but then a pullback down, though still within yesterday's range and looking like an indecisive doji cross right now. US dollar against the Mexican peso. A bearish engulfing pattern yesterday, which wasn't that hard a pattern to make after the previous session's indecisive spinning top. The cap on the market, however riddled holes it might be, is still the dark blue upper time, currently at 1875.13 of the early April to mid-May bullish Andrews Pitchfork. This had been previously aided by the February 2020 low at 1851.71, but they have now separated. It's time now to see and consider what the next pattern will be, and for this I would like to put the following idea in front of you. We have the possibility of looking at the action from 2022 to date as potentially a huge double bottom pattern idea. We are now after the rise during May and now into June, close to the neckline area of around the February 2020 low at 1851.71. As this is something I saw in my monthly charts, I would appreciate the very least monthly closes, consecutive monthly closes ideally, over this level to confirm such a long-term potentially higher move. Thus, with a week and a bit to go, well, just really a week to go until the end of June, let's all keep an eye on where prices close on the 28th of June. So far today, not much. Well, you say not much, but we've had a decent move down, and we're now pushing the bottom of that range and looking to see if we can go down to the next minor support around about the 1820 area. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.